Good afternoon, everyone, and thank you for joining us today. My name is Migdalia Gomez. I'm the AVP of Community Engagement at the Harvard University Employees Credit Union, and I'm here to really host our webinar today, Ask the Experts with Sharon and Mike, who I will introduce shortly. But as folks are logging on, I want to do a quick overview of how today's webinar will go. We have gone ahead. Everyone is in webinar mode, meaning that if you are having your lunch, if you are commuting, if you're out for a walk, we won't hear any background noise. You don't have to worry about being on camera. This is an opportunity for you to enjoy the webinar. Feel free to ask us questions throughout, but know that you aren't going to be on camera and we won't hear any background noise. This is a webinar, so we won't hear that. However, know that we do want to make sure that we're answering any questions you have. So we're going to use the Q&A feature. The Q&A feature is easy to access. It should be either at the bottom or the top navigation. And just to make sure that you know where it is, that it's working, that you can hear me, please let me know using the Q&A, where are you joining us from and when are you looking to buy a home? So in the Q&A, you'll have the option of submitting a question or a comment anonymously, or if you want to provide your information, you can. Know that we won't read and say, Sharon asked this. But if you wouldn't mind just taking a quick moment using the Q&A and letting me know, where are you joining us from and when are you looking to buy a home? Okay. While I wait for those submissions to come in, I also want to let you know that we are recording today's presentation and you will get an email. Today is Tuesday, so you'll probably get it before the end of the week, definitely, with the recording. Oh, wonderful. I see that someone's joining from Miami, Florida. I hope you and all your family and friends are doing well. I know that hurricane hit a little bit different, but want to make sure everyone's okay. And you're looking to buy a home within the next 2 years. So that is helpful to know, Sharon and Mike, that we have someone that's from out of state, specifically Florida. We have someone who is from Alston, Cambridge, also looking to buy in the next 2 to 3 years. Thank you so much. This information is helpful so that when Sharon and Mike are speaking, they'll be able to provide a little bit more context that's more specialized to those that are here. We also have someone that's joining from the DC area looking to buy summer of 2023, so next year. And then someone from Boston, Somerville, looking to buy spring of 2023, but more likely 2024. Thank you, everyone. Really appreciate that. It helps us know you a little bit better, and it helps us make sure that we are addressing your specific areas that you're looking to purchase in. Very quickly, for those that may not be familiar with us, we are Harvard's not-for-profit financial institution. What does that all mean? It's a very long way of saying that we're just like a bank when it comes to products. We have mortgages, checking accounts, credit cards, student loans, RV loans, boat loans. But the biggest difference is that as a not-for-profit, we're able to give back our profit in the form of better value, service, and giving back to our community through charitable giving, volunteering, and other programs such as free personal finance education. And anyone that's affiliated with Harvard can become a member. And once you're a member for life, even after you're no longer affiliated with that Harvard specific institution or Harvard teaching hospital. And speaking of teaching hospitals, I have very exciting news. We are in the process of opening our new branch in the Longwood Medical area on Brookline Ave. If you know where the Longwood Food Court is, we're across the street from that. If you know where Poke World is, we're sort of really close next to them on the main ground level of Joslin Diabetes Center. And was there yesterday. It's looking good. We will be opening later this month. Details to come, but hope to see all of you there, especially in the first month and a half. We have a lot of fun surprises for folks. Now, with that, I want to start introducing our presenters who are really the ones that are going to walk you through the home buying process. We have Mike Levine, who has been with the credit union for many years and is an amazing resource. He mostly works out of the Harvard Square branch. And then we also have Sharon Cummings, who is another great resource, always has so much valuable information. And with that, I will turn it over to Sharon so we can learn a little bit more about the home buying process.
Okay. Thank you, Migdalia. Thank you, everybody, for joining us today. My name is Sharon Cummings, and I am one of the mortgage loan originators at the Harvard Credit Union. I'm happy to answer any questions you may have through the presentation or after the presentation. Just to start the presentation, Migdalia, will you advance to the next slide? So today's agenda, we're going to touch on a few items. First is the home buying journey. The home buying journey can start 6 months before you're looking to buy a home or a couple of years before you're buying a home. It's a huge process, and there's a lot of information that goes into it, and there's a lot of resources that the credit union offers. We'll guide you through the qualification process. What does it take to qualify for a mortgage? A lot of members come in and they'll ask, well, what can we afford? And that's a great starting point to go through with one of the originators at the credit union to figure out, what you feel comfortable with and what that equals looking at homes and as far as size of a purchase of a home or how much you borrow. And then the next step would be becoming a homeowner. After you go through the process, you have an accepted offer, and then you're a homeowner. So the process is from the very beginning, just to get information, through the very end, becoming a homeowner. Next slide. The credit union offers great benefits. One of our benefits that I say we pride ourselves in is personalized service. For the most part, you'll work with one originator from the very beginning till the very end of the process. And they'll help you through navigating, explaining, and working with both with you and realtors, and kind of help you have a full understanding of what you're doing throughout the process. As I said, it's a pretty big process, and it can be a lot of information. So we do personalized service, which I think is a great benefit. We have a range of mortgage products. We offer many types of products, including first-time homebuyer products. We offer 3% down products. We offer conventional loans, adjustable rate mortgages, wide variety of mortgages. We have competitive rates. Our first-time homebuyer, all of our first-time homebuyers, we do give a discount on the rate. We give an 1/8 off the interest rate. So for example, if today's rate was 6 1/4, our first-time homebuyer would get 6.125. So we give a 0.125 off the interest rate. We do programs as little as 3% down, up to as whatever you feel comfortable with. And we also offer a closing cost credit to all of our first-time home buyers, which is $500 closing cost credit. Our process is all done online. It's a digital process for the most part, from submitting your application until the approval. You do have to go, meet with an attorney at the very end to sign everything, but for the most part, the whole process is digital. We do offer, which is very unique, is in-house loan servicing. So when you do close your mortgage with the Harvard Credit Union, you'll be making your payments with the credit union will be paying your real estate taxes. Everything's done in-house. So it's one, you call one place, you'll get the answers you need and go from there. We're not going to sell your servicing of your mortgage. We offer portfolio lending. And what that means is if something's a little unique, maybe a condo has a little bit of a different, is a little unique and doesn't meet the standard guidelines, we may be able to help you with that because we do offer portfolio lending. And we also have a relationship credit that we offer anyone, any non-first-time home buyer who has a checking account with us, we do give a relationship credit towards closing costs. Next slide, please. So right now, the current real estate temperature, it's a little bit unknown. Things have changed quite a bit over the last, several months or some time. What we're hearing, interest rates have risen, and people are, seeing rates, go up in the last several months. And the market conditions, there's not a lot of inventory, I don't think, as we'd like to see. There's still a lot of buyers out there, but possibly not as much inventory. But I do absolutely encourage you to continue looking. Rates are a little bit high right now. There are properties that are coming on the market, and we are seeing our members get accepted offers. Values may have come down a little bit over the last month or two, which is a good sign for borrowers who are looking to purchase their first home or purchase a home. Hopefully the market will continue, rates will steady out and prices will remain, will not go up in more, the prices of the home. So hopefully the market conditions, settle down a little bit and there's more opportunity. But I would definitely say a lot of people are, pausing to purchase the home. I would say, just always look. It doesn't hurt because you could come across the right property at the right time. And, the interest rates hopefully will settle down at some point over the next, several months. Next slide. Okay, and then, usually what we say, where do we start? First thing I would say, you want to start with meeting with the mortgage loan originator and kind of just going through options, getting an idea of, what's involved. What should I do to prepare myself? The first thing we say is you want to check your credit. You want to have a good idea of what your credit report is showing. Most borrowers today have a good idea of what their score is and what's out there because of other resources. Credit cards send you your credit scores, but always have a good idea of what your credit report is showing. This way, it will give you some time. If there is an error on there, or if there is something you want to fix, you have time to, to fix it and move forward. You want to have an idea of what you have potentially to put down on a property. Some members know they want to put down 20%. Some people want to put down 10%. But have an idea whether it's a certain dollar amount. As a lot of our members will come in and say, well, I have, 30,000 saved up right now, and that's what I'm planning on using as my down payment. And we can certainly work with you and back into it and kind of give you an idea of, well, what does that equal to you? What type of purchase price are you looking at? How much of a down payment does that equal? So down payment's important to have an idea. You don't have to have an exact number, but it's good to have an idea. Keep in mind that anytime you put less than 20% down, you do have to have private mortgage insurance. And that's an insurance premium that protects the lender because you're not putting 20% down. Years ago, most borrowers did put 20% down, but today we see a wide range. Members put anywhere from 3%, to 50% down. A lot of our members do end up taking private mortgage insurance, and it works out in many cases. So, down payment's important. 20% down is wonderful, but as I said, talk to your originator and go through options, because sometimes PMI is an option and it may not be a bad option for you. We offer different products. We offer conforming and jumbo. Conforming loan limits vary per county. Anything over 747 would be considered a jumbo mortgage. The biggest difference for a jumbo and a conforming, you need to put at least 5% down, whereas a conforming you can put 3% down. A jumbo mortgage and a conforming may have different interest rates, so talk to your originator about that. And a jumbo mortgage is looked at as a little bit of a more riskier product where you may have to have more funds available after closing, what are called reserves. Usually with a conforming mortgage, we like to see you have 2 months of your monthly payment set aside after closing in case of an emergency. On a jumbo mortgage, we'd like to see 6 months. So it's a little bit more cash flow after closing on a jumbo versus conforming. You want to be aware of assets, what you have. So when you're speaking with your originator, to go over what type of assets, what will you be using as your down payment? Where will those funds be coming from? And then also we'll ask you for what your income is. We also like to verify income, especially if you're self-employed or have any type of overtime or commission income. It's really important that we get a good idea of what your income is during the pre-qualification or pre-approval process. And I'll just give you a quick difference between pre-approval and pre-qualification. Pre-qualification is, I consider it a conversation. We sit down, we run numbers, we talk about the process, we get an idea of how much you'd qualify for. And it's more just a conversation and kind of just going through the process. Pre-approval is everything in a pre-qualification, sit down, go over the process. But with the pre-approval, we actually pull your credit and we verify your income. We want to be sure that you're solid going into the offer when you're ready to make an offer. Pre-approval is what you'll need is when you start working with a realtor and you're ready to put in an offer. They're going to want to know that you've been pre-approved. And the pre-approval leads to a pre-approval certificate, which we would give you during that process and say that you've been pre-approved with the credit union, we've done all of our due diligence, and you're a solid borrower and you're ready to take the next step by putting an offer and start the process. On our website, we do offer a pre-approval, express pre-approval application. You put some basic information there. It will go to one of the originators. We'll reach out to you and we'll go through the process and kind of talk about pre-approval, pre-qualification. If you're ready, pull your credit and issue pre-approval certificates. But you can find that on our website. It's under express pre-approval. Thank you.
Thank you, Sharon. We did have a question that came in. Someone asked, if you don't have 20% down payment, but you want to avoid the mortgage insurance, what are possible solutions for that?
Okay, that's a great question. At the credit union, we do offer a second alternative. We offer what's called an 80-10-10 program. And what that is we do the first mortgage at 80% of the first mortgage. So we'll say $500,000 is the purchase price. The first mortgage would be $400,000, 20%, and then would break up that difference of the 20%. So you would put 10% of your own funds, and then we would do a second loan for the other 10. It's called as I said, 80-10-10. It's made up of two mortgages, a first mortgage and a second mortgage, and then your own funds for up to, we'd have to put at least 10% down for that product. But I always say when I'm comparing products, we always look at the 80-10-10 option and the PMI option to see which one is the most affordable and makes the most sense for you. But we do offer another product, as I said, 80-10-10, but that's with a 10% down payment. The credit union also partners with Greenpath. Greenpath is a benefit the credit union offers, and it helps members with financial counseling. It gives you, it's a great place to start if you have credit questions, if you're interested in possibly, determining, how to read your credit score, how to obtain a credit score. It's a product that's going to help you with your financial wellness moving forward. It's a benefit for the credit union, and you can find that on our website under huecu.org/Greenpath. We also, during the process, we might say, do you have an idea of what type of property are you looking for? Some members, I usually, when I do a pre-approval, I kind of do a purchase. When we're talking about doing a single family or a condo, I kind of do it together. Because a lot of members, in this market, a lot of times you don't know whether you're going to buy a condo or a single family. Sometimes townhouses, they're freestanding, but they could be considered a condo. So a property type, we'll go through options. As I said, we'd do a condo and a single family would be considered one. And then we also offer multifamilies if you're looking to buy possibly a 2 or 3 family and live in one of the units. And through the pre-approval, pre-qualification process, we would identify, the two options, see what you're looking for, and kind of run the numbers based on that type of property. You also want to have an idea of where you're looking to buy a home. I have some members that they're very flexible. They're looking all around Boston. Some people are more specific. They're looking for a certain city or town that they want to live in. It's a good idea to have an idea of where you're looking because the price ranges can be significantly different, or property taxes play an part in that. But once you meet with an originator and you have an idea whether, if you're looking for a specific community, we'll pre-approve you assuming those type of taxes, property values, and work with you on that. But as I said, location can be, you could have a certain location or you can have a variety, and we'll work with you with all of them and kind of back into it and pre-approve you for that particular, for different locations. And then you also want to have an idea of what your wants are and what you're looking for. Before you meet the realtor, you're going to want to know, am I looking for, maybe something that has 2 bathrooms versus, 1.5, or am I looking for something that has a yard or a driveway, or am I okay with street parking? So just have your wants, your needs, and kind of, I always say, make a sheet and say, okay, I definitely know I want this, but I would like this. So have some, some definite choices, and then if not, then some things that you'd like to have. And then when you're working with the realtor, they'll know going into properties what would be interesting to you. So we're going to turn this over to Mike right now. I found the place. Now what happens now that I've been through the process, I've got pre-approved, and now I'm actually ready to put my offer in. I've put an offer in, my offer's been accepted. So now what happens? At this point, where do I go? And now Mike's going to help us with this part of this.
Okay, thank you, Sharon. Again, thank you everybody, for being here. Now, this slide here, it says assembling a team. You want to make sure that, when you're starting the process, you're going to get pre-approved. It's always a good idea to have a real estate agent to help you with the process. Among the benefits, many benefits of the real estate agent are the fact that they're going to do a lot of the so-called legwork for you. They'll go out and look at identify properties for you, and it's not costing you anything to work with a real estate agent, because the way it works is the person selling a property will hire a real estate agent, pay them a commission, usually around 5% of the purchase price. So if you're going to have an agent, a so-called buyer's agent representing you, the two agents are going to split that commission. So again, they'll do all the work, a lot of the work on your behalf, and not costing you anything. As far as, where to find a real estate agent, you have a few different options. Sharon and I and the other originators, we have realtors that we've worked with in the past. Sometimes we can recommend a realtor. You may have friends, relatives in the area that have bought properties, they may be able to recommend somebody to you. You just want to make sure you have somebody, in the general area where you're buying a property. So for instance, if you're looking in Cambridge, you'd want to have somebody that's either based maybe in Cambridge or one of the surrounding towns, because they're going to know the area, they're going to know the properties. Hypothetically, if you're looking in Cambridge and, you have a real estate agent that's based out of, let's say, Roslindale or something, they're not going to know the area as well. So you really want to try to find somebody in the area. Another thing you want to consider is having an attorney. You're making a significant investment, you're doing something you've never done before. So you want to make sure you have somebody, watching your back, so to speak. It's not required. The lender will have an attorney representing them to do the title work and conduct the closing. But it's a good idea for you as a buyer to have an attorney. They will review the purchase and sales agreement, which I'll go through. They will, in some cases, insert certain language, things in there to protect your interest. Now, as far as the cost, Sharon mentioned the closing costs and down payment. This is going to be an additional cost to you. It could be somewhere, around $400 or $500. But it's probably money well spent. Just knowing that, you've got somebody looking out for you. Another one to consider is having a home inspector. And I'll get to that in a few minutes. But when you find a property, a lot of people will they find a home inspector to come and look at the property and inspect it based on from a structural standpoint. Look at things like the roof, the foundation, the electrical system, plumbing, things like that. You just want to make sure, because these are things, the average buyer isn't going to know. And again, that's another expense. It could be anywhere from, $400 to $600. But I would strongly recommend it. I know the last house I bought, we had a home inspector, and he found out that the roof had to be inspected, and ended up renegotiating the price. So again, that's another thing to consider when you're, assembling your team. We go to the next slide. Okay, so Sharon has educated you to the point where you're ready to make an offer. So again, this is, I mentioned the real estate agent. You're going to work with your real estate agent when you make that offer. The real estate agent will communicate with the seller's agent, And they will prepare a document called a offer to purchase, which is basically like maybe a 2 or 3 page document that'll spell out the seller's names and the seller, the buyer, the purchase price, the closing date, which will be the date that you're going to take ownership of the property. And that's typically something you'll work out with the seller because they probably have a specific time when they want to close. Generally, that closing date will be around 45 days from when you make your offer. The offer will contain some contingencies. One of the things will be, subject to you getting a mortgage. Yes, you've been pre-approved, but there's always a slight chance that something could go wrong. So you want to make sure that your offer is subject to you getting a mortgage. Subject to the home inspection. Now, when you make your offer, you're going to make a deposit, normally about $1,000, which is refundable. So when you do your home inspection, hopefully from your standpoint, everything goes well, but in the unlikely event that there are some major problems, you have the option of walking away and you would get your deposit back. Or if there's an issue, like my example with the roof, you can go back to the seller and, renegotiate the price. Now, one thing that is getting somewhat common in this market where the sellers seem to have a lot more leverage, you're going to come across situations where the sellers want somebody to waive the home inspection. And that's something you'd have to decide. Personally, I wouldn't recommend it, but there may be situations where you're competing with somebody for the same property. They're willing to waive the inspection and you're not. So I typically tell people, get some professional advice, on that. They mentioned the attorney before. Once you have your offer accepted, I'm sorry, your offer is accepted, you've gone through the home inspection and you're ready to proceed. The next step, you're going to sign a document called the Purchase and Sales Agreement. You probably hear it referred to as the P&S. This is the point where you're going to want to have an attorney. And as far as the attorney, you can always use the lender's attorney. There would be an additional fee for them to represent you. Possible your real estate agent may have an attorney they can recommend. Or again, if somebody bought a house recently, they may be able to recommend somebody. But usually from like 7 to 10 days after your offer is accepted, they will draft the purchase and sales agreement. And this is the one that really, dots the I's and crosses the T's, so to speak. It's probably like a 12 to 15 page document that spells everything out. And again, it would have all these contingencies, specifically the mortgage. One thing it'll also include is, when you're going through negotiating, there are things you might want included with the property. You might decide, I want the washer and dryer, maybe the seller is agreeable to it, the washing machine, swing set, things like that. As long as they're agreeable to it, that's fine. But things like that, you want to make sure that they are included, in the purchase and sales agreement. Because, if it's not included, it's not going to happen. So you want to make sure those are included in there. The purchase and sales agreement is going to have some very important dates. And, this is something that, you'll need your attorney to help you with. Obviously, the most important is the closing date, the date that you're actually going to take ownership to the property. Another date will be the date by which you have to apply for a mortgage. Now, granted, you've probably been pre-approved already, but the application you've submitted is a very basic application. There's a more detailed application that you have to complete once your offer is accepted. And typically, the purchase and sales agreement will specify that you have to apply for that mortgage by a certain date. Then there will also be a date called the mortgage contingency date, which is the deadline by which your mortgage has to be approved. And typically that's somewhere around 7 to 10 days prior to the closing. And actually, you know what? Probably more like 10 days to 2 weeks now that I think of it. So that's a very important date. Now, that's the lender's responsibility. It's to make sure that we do our due diligence and have your commitment, your approval on time. And as you're going through the process, your real estate agent's going to be aware of that date. And, they're going to follow up with you as you get close to that date, just to make sure, that you do have it. Okay. We go to the next one. Okay. Okay. So I mentioned, applying for the mortgage. And the mortgage, as Sharon said earlier, it's online. You'll submit your application. One of the important aspects of submitting the application is you will get a loan estimate. And we talked about the closing costs. You will get a document referred to as a loan estimate that's going to give you a breakdown of all the closing costs associated with the mortgage. So you'll know that in addition to your down payment, you'll need to have a specific amount. Let's just say hypothetically, it's $6,000. So in addition to the closing costs, you need to have another $6,000. Keep in mind that as the document implies, it's an estimate. It's not going to be exact, but it should be a very close estimate. Laws changed, a number of years ago where there's not much, the lender isn't allowed much variance from what is disclosed to you originally. I can remember many years ago, I worked for a company that used to refer to some of these closings as surprise parties, where you would tell somebody your closing costs are $5,000, and then like a day or two before closing, they tell them, oh, your closing costs are $7,000 or $8,000. Those days are long gone. So you can be assured that once you get that loan estimate, it's gonna be a very good idea of what your costs are gonna be. And, there won't be much, it's gonna be very close. Okay. Now, the mortgage process. So you've submitted your application. After you've submitted it, you'll be in touch with your originator. Typically, the originator will give you a preliminary list of items that we're going to need from you. A couple of recent pay stubs, your last 2 years W-2 forms, copies of your last couple of months' bank statements, any other asset accounts you have, like a retirement 401k, we'd like to get a copy of those. So those are items that we'll be asking you for, during the process. And you'll be able to upload those right to your portal, make it easier for you. So it's not like you're going to have to, walk into a branch office and deliver copies or anything like that. At the same time, the lender will be ordering an appraisal. We have independent appraisal companies that we work with. And so we will hire somebody to go in and look at the property, just get an idea of the condition. Most importantly, let the lender know that the property, is worth what, the buyer is paying for it. Now, I mentioned the home inspector before. These are two different processes. The appraiser is looking strictly at, at the market value and getting an idea of the, interior condition, whereas the home inspector is looking at it, from a structural standpoint. While this is going on, the lender is going to assign the file to an attorney to do the title search on the property. They have to make sure that there are no liens on the property, because we can't let you close, if there are any issues with the title. And the attorney will eventually be the one doing the closing. As you start submitting all the documents and we get the appraisal back, the next step will be for the loan to be submitted to an underwriter to review, and they will issue your approval. It's always referred to as a commitment letter, and that will be the formal notification, that your loan is approved. And as I mentioned, during the process, your real estate agent will probably be following up with you on the status of your commitment letter. Because hypothetically, if there's a problem and you can't, your loan is denied, then that, can raise some complications. When you get your commitment letter, it's very possible there may be some conditions. And by that, I mean additional items we need from you. Maybe the underwriter is asking for an additional pay stub or an updated bank statement or an explanation for something that's on your credit report. Typically, these conditions, there probably aren't going to be many, and they're probably going to be, pretty minor. Once they have those conditions, then your loan is, cleared to close. And by that, we mean we have everything we need from you. We let the attorney know that, and then they would take over from there and start the process of scheduling your closing. Yeah. While your loan's in process, we strongly recommend that not applying for any new credit. Because what'll happen is just prior to closing, we have to get an updated credit report. And that's probably, around 48 hours before closing. So if you're a couple of days before closing and we get a credit report, we see that you applied for something, with, Citizens Bank, we have to find out what that was. If there's a new loan involved, we have to see how much the payment will be on that, and hopefully an additional payment won't increase your ability to qualify for the mortgage. So if at all possible, try to avoid applying for any new credit. I know there may be situations where, you had car trouble, you have to buy a new car. If you're going to apply for credit, it's probably easiest if you let your originator know, and then they'll be ready for it, prior to closing. All right, so your loan's been approved. It's been cleared to close. And then again, the attorney will be taking over from here. I mentioned earlier that you're getting the document called the loan estimate with a breakdown of your closing costs. You will then be getting, and it's probably 3 to 4 business days prior to closing, a document called a closing disclosure. And as you go through the process, you'll hear it referred to as a CD. Closing disclosure is a very similar document to the loan estimate. It's got a little more detail, but most importantly, these are the exact amounts. So where you might have got an estimate of the closing costs, this will have the exact amount, and most importantly, the exact amount that you have to bring to closing. Most likely, the attorney will want you to wire the funds to their office for the closing. They like to have it at least 24 hours before closing. Now, the closing disclosure, I mentioned, it's usually given about 3 to 4 business days prior to closing. There's actually a federal law that requires it at least 3 days prior, and it's very important that the lender sends it to you at least the 3 days before closing. You have to acknowledge receipt. And the 3 days is important because it gives you time to review everything and make sure you're comfortable and you understand everything. This regulation with the closing disclosure, it's probably been in effect, I want to say somewhere, maybe 8 to 10 years, something like that. Prior to that, they used to use something called a settlement statement, which had to be given to you at least supposed to be 24 hours before closing, but it wasn't uncommon for a lender to give somebody the settlement statement at like 3 o'clock in the afternoon for a closing 10 o'clock the next morning, and you have no idea, you're unsure of a lot of things, you don't have time to review it. So this closing disclosure, it's a very good document, and again, it gives you time to make sure you're comfortable with it. The next step is you're gonna do, and again, this is not required, but it's certainly recommended, you're gonna do a walkthrough. You were in the property, at the time your offer was accepted, that might have been, 45, 60 days ago. You've outlined what items are supposed to stay in the property. You want to go back into the property. Typically you do it, maybe if it's a afternoon closing, maybe in the morning or maybe the day before. You want to go through the property and make sure the property is in the condition that you were expecting, that it's clean. Any items that the seller was supposed to take, you want to make sure they've taken them, and items that were supposed to remain, like hypothetically a washer and dryer, you want to make sure that those items, are there, and obviously that the seller is out and, they've taken everything with them. Okay, next. Okay, just a kind of a summary of the whole process. From the beginning, the items that, like Sharon recommended, the express pre-approval. So that's the application you would submit, to start the pre-approval process. You get your pre-approval, you go through the negotiation process, you get your offer accepted, you sign a purchase and sales agreement, you submit your application. One thing I did neglect to point out is when your application is submitted, your interest rate is going to be locked in for 60 days. So it will be locked in, and unfortunately, during the process, if you see the rates have come down, unfortunately, it's going to be difficult to try to, relock, for lack of a better term. You'll get your loan estimate, you'll submit the various documents that are required. Next, okay. Okay, again, you'll submit the documents, you'll get your commitment letter, the closing instructions. That's the process I mentioned where the lender, gives the attorney the clear to close. So the attorney is ready to proceed. The credit report, I mentioned that usually about 48 hours, before closing. We just have to make sure that you haven't incurred any new debt. You will get the closing disclosure. And again, that's got to be at least 3 business days, prior to closing. Okay, next. Okay, as Migdalia and Sharon indicated before, the credit union, has various products and services, from a mortgage standpoint. Typically, when people think of a mortgage, they think of a 30-year fixed rate loan, which is certainly the most common type of loan. However, there are other types of loans. There are loans for shorter terms, 15 years, 20 years. Obviously, those are going to have much larger payments. It might be tougher to qualify, but those are other options. There are some adjustable rate loans where you'd have a lower payment at the beginning of the process. Those are other options. That's the type of thing you would look at when you're meeting with an originator They will sit down with you, give you all the options, and, determine what's best for you. You don't have to make that decision when you're being approved. Okay. Here this credit union has 5 originators. So in addition to Sharon and myself, you have Helen Lascaris and Ryan Douglas, who both work out of the MGH office. Sharon and I work out of the main branch in Harvard Square. Daisy Familia had been working at the Longwood branch, which is now closed. She's been working at Harvard Square, and once the new Longwood branch is open, I should say, Daisy will be working out of there. So wherever you work, that we have originators, available if you wanted to meet in person. Obviously, that's not required. We could meet remotely. Keep in mind that we are available. I don't know if I want to say quite 24/7, but we're available nights, weekends. And it's not the type of business where, at 5 o'clock, we just shut our computer down and forget about it, or at 5 o'clock Friday, forget about business until Monday. It's not uncommon for us to get calls at night or, Saturday or Sunday, people needing an updated pre-approval. That's part of our duties here. So, and this is a service that we offer. So when you're going through the process and, it's a Saturday afternoon and you need an updated pre-approval, one of us should be able to help you. So, like I said, we know we're available because, the type of business, we can't just, shut it off at our convenience. Next.
Thank you, Mike and Sharon. I have one question that came in. Can you share options for home equity loan? How does payback work? When is it wise to use equity and when is it not?
I can take that. Now, home equity loan is something you would probably take out after you've been in the property. You'd maybe if you want to do work on the property. However, one thing that's important on the home equity loan, or there's 2 options. There's a home equity loan and a home equity line of credit. And, I don't want to get too detailed on that. But one of the keys with a home equity loan is the home equity loan plus your existing mortgage. The 2 of them can't be more than 80% of the value of your property. So let's just say you buy a property with 20% down, your new mortgage will be 80% of the value. So where you're already at that 80%, you won't have equity in the property to do it. So it's probably something you'd have to do after you've been in the property for a while and you've built up enough equity in the property. Or if you've made a significant down payment, you may have room for the home equity loan.
Thank you, Mike. I don't see any additional questions at the moment, but I do want to remind folks, if you do have questions, please use the Q&A to submit them. And just a quick reminder to everyone, please take a moment to complete our survey. It's online at hbcu.org/survey. And I know that Mike and Sharon provided a lot of great information, but keep in mind, as they have both mentioned, you can meet with one of them or one of our other mortgage loan experts to talk more about your specific situation. It is hard to tell. It would be a disservice to tell everyone this is what's the best for your situation without knowing your specific situation. So reach out to the MLOs. I did put their information. I am putting their emails in the chat, but I also put the link, which is huacu.org/home-loans to get personalized information. And remember that this is educational in content. And I have one question that I saw that just came in, and I will ask, and then I'll leave it up to you. Maybe Sharon, if you want to take this one, since I know Mike just took the last one, but could you refinance your mortgage to get rid of PMI without putting 20% down?
That's a great question. Yes, once you anytime you refinance your mortgage, you're gonna have a new value placed on the property. We do an appraisal, the appraisal comes in. As long as you have that 20% equity, the PMI is no longer there. It's a whole new transaction. One thing I neglected to mention too is PMI is only, at the credit union, PMI is only there until you hit that 20% equity. So if you've paid down your mortgage over the past several years, and you now have 20% of equity, you can request your PMI to go away. So it's not there for the life of the home. But yes, to answer your question regarding the refinance, when you refinance, it's a whole new transaction. The value's looked at, and as long as the value exceeds and you have enough equity to 20%, there is no PMI involved. There's no longer PMI.
Thank you. And Mike, this question is for you.
Yes.
Does it matter in what state you're purchasing a home for HVACU to serve as a mortgage lender?
Very good question. I apologize for not answering that before. Right now, the credit union is able to offer mortgage loans just in the 6 New England states. Hopefully, in the upcoming years that might change. We might branch out, but right now it's the 6 New England states.
Thank you. I don't see any additional questions at this moment. So I just want to thank both Mike and Sharon for all of the information that they shared today. And knowing that, oops, sorry, I just saw someone said that they don't see the survey that was listed. I am so sorry. I will, in the email, we will make sure that it's included on that web page. But I do want to, again, thank Mike and Sharon for all the information that they've shared. Their emails are also in the chat. It's Sharon_Cummings@harvard.edu or Michael_Levine@harvard.edu. You can also reach out to our other MLOs. If you have any questions, if there's anything that you think about later, I also provided a link to our YouTube channel, which is youtube.com/myhvcu, where you can see our home buying forum videos where we have had in the past, we've had a real estate professional, real estate attorney, a home appraiser, home inspector, all provide really good tips on the home buying process. But that is all that I have. I don't know, Sharon or Mike, if there's anything else you'd like to say before we close today's webinar.
No, I just like to, thank everybody for taking the time being here, and please feel free to reach out to us. I know the presentation we made, it's probably geared more towards somebody who's ready to buy a home. But even if you're in a situation where you're not going to buy for a couple of years, we're still happy to meet with you, because it's never too early to start the process. So even if it's 2 years away, at least you have an idea how much you're going to have to save, or you may find out that you have some debt to pay off. But again, it's never too early to start the process.
I agree with Mike. Thank you very much for joining us today, and please reach out if there's any questions. I know it was a short period of time to get a lot of information. And as Mike said, whether it's 2 years from now or 3 months from now, we're more than happy to go over the process, once, twice, 3 times, even before you're ready to get pre-approved. There's a lot of information we can share with you. So I welcome any type of email, appointment, or phone call.
Thank you both, and thank you everyone for joining. I hope everyone has a wonderful afternoon.
Thank you, Ms. Dahlia.
Thank you, Magdalia. Thank you.